Welcome back. You are watching Quarter Se Quarter Tak, the rundown that really brings you up to speed with what to expect from corporate India in the second quarter. Well, let's actually move to another sector where numbers, at least in the month gone by, the September numbers have been looking very, very good. I'm talking about the auto sector. Now, can this translate into some very solid revenue and EPS growth? Let's get in our colleague Naveen. He has the lowdown for us. Naveen.
Well, things are expected to be better for the auto sector in the Q2 of FY18 as compared to Q1. Passenger vehicles over there, Maruti is one which will be leading the growth with a revenue growth of almost more than 20%. On the other hand, the overall margins will be aided by positive leverage kicking in both because of volume increase as well as realizations improving. In the commercial vehicle space, Ashok Leyland is where the growth will be seen, expected to grow more than 30%. Also remember, the CV segment will be growing due to two reasons. One, the higher tonnage as well as the increase in freight rates in this quarter itself. Two-wheeler segment, Eicher, that is where the consistency will be seen. The growth is expected to be more than 30%, both in terms of margins as well as revenues. Also, Hero is one company which is going ahead of the industry in terms of the two-wheeler space. Also, Bajaj, there is seem to be some turnaround expected on the back of higher volumes. Back to you.
Fair enough, Naveen. Anish, to come to you for the expert comment, we already know the numbers, the sales numbers. What will you watch out for and for which companies?
So I think the companies which probably don't report numbers are the ones which one should watch out for. So we probably would see a very strong growth coming in Motherson Sumi. We would see about a 50% odd kind of profit growth. We would see a similar kind of a profit growth coming out of Bharat Forge. At the same time, the two-wheeler companies are the ones where two-wheeler companies and Tata Motors are the three companies where you will see very, very low growth. Like, for example, Hero MotoCorp will probably PAT growth would be around 5%. We are expecting Bajaj Auto to report decline in net profit, and so would Tata Motors. TVS would grow strongly at about 20.4% in PAT. However, having said that, what we see is that the last month, that's the month of September, has been great for a lot of auto companies. And that is something a lot of people would convert that into a trend, but probably you should not forget that Diwali for the last year and this year has been in different months, and to an extent there has been some preponement of sales and stocking with the dealers ahead of the Diwali season, more in September this year than in last year. So you saw a more robust growth on a YY basis. What we find is that we'll need to combine 2-3 months and see how the growth is going to be. At the same time, everything gets reflected into the quarterly numbers of this quarter and the next quarter. But in the auto space, Eicher clearly continues to steam ahead. Maruti continues to do very well. It has been gaining market share and continues to gain market share. It has large waiting periods for almost all its new models. So these two are really good stories to continue with. And the other two good stories is going to be Ashok Leyland, which is in the CV space and is gaining market share. It's improving its margins, and therefore, and also volume growth has been fairly decent. So Ashok Leyland and Motherson Sumi, these are the four very strong stories which we continue to recommend to investors.
All right, that's the auto sector. Let's move on to the next big one, and it's really a big one. I'm talking about banking. Abhishek is joining in. I guess it'll be a very granular story of the good, bad, and the ugly. Abhishek, run us through the overall theme.
Loan growth has picked up in the last 2 months, but however, they are expected to remain in lower single digits. Slippages trend is expected to remain downwards and therefore aiding in provisions being lower for PSU banks and aiding in their earnings momentum. However, elevated provisions for private sector banks can be seen and therefore earnings impact over there will be felt. Bankers' comments with respect to the 40 new additions to the IBC by RBI will be seen very closely with respect to its impact on the balance sheet.
Fair point, Abhishek. South Indian Bank has already told us that slippages could be under control, but provisions will go haywire. Sanjeev, what will you watch out for? Can there be pleasant surprises with the corporate lenders?
Well, difficult. If you saw what the numbers from South Indian Bank was, they were quite dismal in the sense that NIMs and net interest income may have gone up, but the provisioning part was really very difficult. And I think that will be the cornerstone for some of the PSU banks and namely ICICI and Axis, which are the major corporate lenders. It will be the retail guys which will be laughing their way to the bank as NIMs expand and we think asset quality will be under control. So these will be the 2-3 key points. The other thing would be that given that the last base effect of AQR, maybe you get some sort of treasury income which could escalate for the likes of State Bank and Bank of Baroda.
Okay. Yeah, a little bit of treasury income, and I think by October 1st, the yields had started rising. So banks just escaped by the skin of their teeth. Nigel, let's get you in here. What are you expecting from the metal space? Commodities, all our experts were saying, will have a good quarter.
Well, expect a very, very good quarter coming in from the metal stocks. Why? Because LME prices of all base metals are up between 25 to around 30%. Even for the ferrous stocks, I've seen that steel prices are up more than 21 to around 23% on a year-on-year basis. What can play spoilsport then? For the ferrous stocks, well, iron ore prices have spiked up. Coking coal costs as well have gone up. So that's what will hurt them. And in terms of aluminium players, what's going to hurt them? That coal prices have spiked up and also caustic soda prices have come in higher. In terms of iron ore as well as coking coal, Tata Steel and SAIL, they're partly protected. JSW Steel, though, they're not integrated at all. So they'll get hurt harder. Though on a sequential basis, we're expecting the EBITDA per ton to expand. Watch out for Tata Steel in particular. Volumes are likely to come in higher because of the expansion at Kalinganagar. We have demand as well that's looking quite good, and European operations have been looking steady.
All right, thanks, Nigel, so much for that. Dhananjay, so, I mean, what does this mean in terms of the EBITDA or EBITDA per ton metric, which a lot of companies look at? Because as Nigel is explaining, even input prices are rising for metal companies.
So if you look at the thing is that the realization for the metal space, especially for the steel manufacturer, is likely to be much higher. You had some impact of the input cost, but I think by and large the margins are going to expand. So if you look at it, for the overall metal space for our universe, the revenue growth is roughly about 26%, and the operating profit growth is almost like 66%, and the PAT growth is almost like a huge 150%. So there is an increase in volume. There is, especially for the steel sector, increase in realization, etc. I think all those things will actually feed into the sector.
Is all this in the price, or are we likely to have upside surprises in metals?
So I think we are going to have an upside surprise from a metal cycle standpoint. We think that globally there is an uptrend as far as metal prices are concerned, with stronger numbers that are coming from a macro standpoint from advanced economies. There is some concern on China, but by and large there is an upturn globally. So I think from a global metal prices, even now with respect to steel, I think there is an upside with respect to metal prices, and there is a certain supply constraint that is actually being put in place within China, and there is a sort of infrastructure demand that is also there in China. So I think that is going to pan over several years. So there is a sort of a general trend of an upside with respect to metal prices. So I think we had gone a little bit overweight on metal stocks even last year. That trend seemed to be evolving. So I think that trend is going to will continue. And I think this quarter you have a phenomenal expansion as far as profit growth is concerned. So that continues, and we did a sort of a plant visit in Tata Steel in Jamshedpur last week, and I think we came back very positive in terms of the plant capacity utilization, the Kalinganagar plant ramp up, and the way the management is looking at the future. So clearly they are looking at a better demand scenario going forward.
Okay, Dhananjay, so get your point. I think the bottom line is that expect this sparkle to continue on metals. It's a great upcycle, and the top is not yet here. I think that's the point that you're taking, and we completely take that. Let's quickly move to yet another big sector. We're talking about the FMCG czars on the street after GST. Can they show normalcy this time around? Mangalam is here to tell us what the numbers might throw up.
The second quarter of this fiscal is all going to be about restocking after the first quarter was about destocking. Also, the festive season, that one's come into this quarter as against the previous year, so that one would spur some sort of demand. It'll be more prudent actually for FMCG companies to look at volume growth in the first half and compare them to the previous year's first half. The second half, of course, will have the base impact coming in from demonetization, so likely to improve much more. But as far as this quarter is concerned, industry checks suggest some weakness in the rural as well as the wholesale markets. ITC volumes expected to decline 3% given the GST weakness. Asian Paints seasonally weak quarter for paint companies, flat volumes there, mid-single digits for HUL, Colgate and the likes, and high single to double digits for Imami and the others.
Okay, thank you very much for that summary, Mangalam. Sanjeev, which FMCG will you back? Will FMCG live up to expectation?
Yeah, so you will have to look beyond this quarter because we've already seen the likes of Lever tell us that rural demand is not picking up and volumes and margins could be under pressure. You know the reasons, and I think the GST disruption may play a big role. On a price performance, we think the risk reward for an ITC is extremely lucrative. So is the case with a Marico, which could be an outperformer. Asian Paints will also get hit because of the rise in crude prices, which could be an input cost. But Lata, just a little bit sideline from that would be the beverage market. You know, Tata Global and Nestle. These, if you stroke them in the FMCG basket, they would be relative outperformers given the advent of coffee, Starbucks, and that whole chain picking up. We think Tata Global, Nestle are two outperformers. As a recommendation, we've had a buy call on them since last 6-9 months, and as a disclosure, we have positions in them.
Oh yes, Tata Global, Jubilant, Manpasand, Britannia, all of them have already risen about 70% year to date. So can they surprise and continue to command the price that they have will be the question. Let's take a break on that note. We are going to come back with a couple of more important sectors in a minute. Pharma, NBFCs, cement and power. All that in a minute.